Good morning, everyone, and happy Friday. So, the market is not looking too bad today. The China stocks are blasting to the upside, and the rest of the market's kind of split, to be honest. So, we could see we have stocks like Alibaba up around 12%, JD up 12%, Baidu up 10%. So, those are looking good. On the other hand, we have companies like Amazon, Intel, and AbbVie pretty deep in the red. So I would say Amazon is one of the worst performing stocks today. It's down around 11%, Tom.
Yeah, and they're a powerhouse. I would have kind of expected Amazon to do a little bit better, even though their earnings were definitely not the best. I just expected a little bit better of numbers. Now, I do know that they took a big hit, Mike, on their Rivian position, which obviously that played a big role into why they ended up losing on their earnings. But still, to see the EPS come in negative 7.5 whenever they were expecting positive 8.5 or 8.7 is a really big difference there. And then, Mike, we also saw that revenue just didn't hit. And then there was a lot of other factors too. So it's rough for Amazon right now. We look at them on the daily chart. They are really gapping below some of these big supports they were sitting at, Mike. Like they were really hovering around 2,700 yesterday, and they are really low today, down to 2,570 right now. So definitely some big drops here. I will say, though, they're approaching that $2,500 area, and that'll also be right around the 1,000 SMA, which, you can take that for what it's worth.
Sounds good. Yeah, and it looks like the growth stocks aren't doing too bad today either, Tom. Like, check them out. Like, DraftKings is trying to move up. Zoom's trying to move up. Roblox was trying to move up too. So it looks like they're not doing too bad. So while we do have some companies pretty deep in the red like Amazon, it doesn't look too bad overall.
Yeah, it really doesn't. These growth stocks really look good, like you pointed out. Even some of these like space stocks are doing okay today, like RKLB. They're pointing back up with a lot of these growth stocks. We also have ChargePoint starting to move up, which is awesome to see. FSLR, even Peloton, Mike, believe it or not, is moving up in a pretty good way. So yeah, lots of these growth stocks are having a great day so far, which I'll take it, Mike, especially after what we saw at the beginning of the week. Like, look at poor Peloton here on the chart. We're definitely still under that the levels that we were sitting at on Monday. Same thing even with DraftKings. Like this uptrend has been nice, but we're still sitting like where we started the week, which sucks. But this momentum can continue today, and it looks like DraftKings, Mike, is breaking out of a huge resistance right now, right around 1430. We've had a ton of bounces there this week, so maybe we'll continue to run here.
Awesome. What are you thinking about Zoom? I've really had my eyes on that one too.
Yeah, this one looks great, Mike. It's right at that $100 price point. It did fall below there this week a little bit, but we really held here at 96. You can see there was 4 or 5 almost really distinct touches there at $96, and we're holding it very well now up above 100. So I think it looks great personally. And you look at that daily chart with Zoom, Mike, and whenever you zoom in on it, you can see that they're hovering right around that big support of like 94, 95. Like I said, they bounced off 96 over the past couple of days. So I really like it, Mike. It looks like they're turning themselves back up. That IV is also starting to pop back up a little bit, which is interesting. So I'm curious to see how they're going to move. But so far, it's definitely looking explosive today. And I hope it continues in the next week, Mike. If we see a nice week with the growth plays next week, it would definitely be awesome.
All right, there we go. We have neighbor Jay saying, morning guys, thoughts on Boeing's direction today. So let's take a look. Boeing today doesn't look too bad. It's down around 0.3%. Honestly, I would not call it like good to the upside. It looks decent right now. Tom, what I'm seeing is lower highs over the past couple of days. I'm also seeing higher highs over the past 2 days. So it looks like we're seeing a wedge right now.
Yeah, we kind of are. I could see that too a little bit, Mike, and it's just not looking the best here, especially like on that daily chart. I just think it looks a little bit brutal here. It looks like they could end up popping back up though, Mike. There's been some consolidation the past couple days, especially when the stock's gotten down around that 150 area. It's been bouncing a little bit, so maybe we'll hold today. If we can break back up above 155, then who knows? Maybe Boeing will start running a little bit more to the upside. But for right now, Mike, I'm not too bullish on it either. looks a little flat, and there is some green momentum today, but like I said, we need to get some solid breaks of some of these resistances that have been pretty telling over the past few days.
So if I had to rate it between 1 and 10, 10 being extremely bullish and 1 being very, very bearish, I would rate it like a 6 or something like that.
Yeah, I think I would too. Maybe like a 6, maybe a 7. I don't really see it like falling off the table, especially with how they fell with earnings earlier this week. But I definitely see what you're saying there, Mike. And I'm really hoping to break these resistances. I would also rate it something close to a 6. I know Boeing sometimes moves like the airlines. I'm curious to see how they're kind of doing today. And, at least they're green, which is good. I know that doesn't necessarily mean Boeing will go up, but it definitely helps.
Yep. Alrighty, so looking at some of these other top runners right now, it looks like BABA is kind of holding its ground. Like it's up around 11% right now. On days like today with these China stocks, a lot of times it's tough to play them because they're already up so much. You know what I mean? Like a lot of times, like some of the other like growth plays or even big tech plays, like USA tech plays, it's very rare to have them open up around 11%. So you have to be careful playing stocks like BABA sometimes when they're already so high at open, because it's like, you're like realistically a stock's only going to move so much in a day.
Yeah, that's very true, Mike. And we've seen that happen a lot lately with earnings, even with stocks like Tesla. Like if we look this week, if I need to go back here a few days here, man, what day did Tesla report? Was that last week actually? Let's go see.
Yeah, last week.
Yeah, okay, yeah, it was last week. So you can see here, like in the middle of the day here, like Tesla, they reported earnings at the end of the day. They ended up rocketing up, but then, as we know, Mike, they opened that day up like 12%, and then they gave all of those gains right back. And I'm not saying BABA's going to give their gains back as much as Tesla has here, but I know what you're saying with how if you see a stock up like 10 or 12% in pre-market, it usually pulls back a little bit. Not every time, but it's definitely good to expect some type of consolidation after that big jump there, especially since we jumped up above $100, Mike. Actually, $100 seems like it's holding up as a decent support for BABA here.
Yeah, there we go. These China stocks, like we've been saying, Tom, they're at a good level as long as you're comfortable taking the risk associated with them. A lot of these China stocks, not all of them, but a lot of them do pretty well fundamentally. But it just depends on if you're willing to take that risk, So I think they're at a good level, especially when you have good news from the Chinese government. And then we also had good news with like the Chinese government and the U.S. government working together. And then on top of that, BABA is set to buy back a ton of shares too. So overall, the news has been trending in a good direction.
Yeah, it has. And I really am glad to see that, because I remember there were even some reports coming out saying that China might try to like help Russia with their Ukraine assault and everything like that. And the fact that we haven't been seeing any of that is really, really good. I know that we were going to hit China pretty hard for doing that if they did. And it's good to see that they ended up not doing that. And I think that just helps everybody, besides Russia, of course. But, we don't need to help them. So that's okay. But but either way, I mean, it's awesome to see the China stocks running. Like you said, it's been a long time since we've seen some nice pops out of these stocks. And, I feel like that this news is good news, Mike. It's very rare that we have good news surrounding the Chinese government. So the fact that they say that they're going to pledge more stimulus, and that obviously the couple months ago they talked about kind of obviously like slowing down on all of their restrictions and stuff and all of their investigations into these companies. So that's good news too. And I'm just glad to see that these stocks are recovering. What I really like about BABA, Mike, is it kind of bounced around that all-time low here, or that low of the past few years, around $75 to $80. Seems like that low held up.
Oh yeah, big time. So that's good there. We have Jerry saying, just joining the stream, what do you think about Apple earnings and how will that affect the market? So Apple beat on a lot of their numbers. Overall, it was a pretty good report. Apple stock is not doing anything today. Like, it's literally at 0%. Like, it's very, very flat. I would say this is a good thing. The main thing I just did not want to see was Apple tank down like we saw Amazon tank down or like Facebook tank down on their previous earnings report, or even Netflix on their most recent earnings report. That was my biggest concern, because if Apple did have a big move down, not only would it have a direct impact on the S&P 500, because Apple is the heaviest weighted stock in the S&P 500, but it would also kind of like, quote unquote, like set the tone for other stocks that are yet to report earnings. So I'm just happy Apple didn't tank for those reasons. Obviously, if you're looking specifically at Apple today, it's very flat, but it is holding up well. Like, it moved up a lot at first, tanked down a lot after that, and it's on its way back up. So I would classify it as a fine earnings report.
Yeah, I think it was a great earnings report. I just think the movement was a little bit lackluster. Like, obviously, Mike, that move up initially was great up towards 170. It was looking pretty hot. Whenever I saw Apple falling back down towards like 153, 154, I was like, oh no, like what happened here? But I didn't really see anything that telling that would cause that big of a drop. But I'm glad to see him back up. That's the good news. They ended up opening pretty close to yesterday's closing price. So I'll definitely take that, Mike. Like you said, it's not really doing anything. It's up. It's almost break even compared to the closing price of yesterday. So that's good news there. And like you said, I'm glad it didn't tank. But I am a little bit upset that it didn't start flying up, Mike. We always want to see some nice pops. That always is definitely nice to see. But I'll take it with Apple. It was definitely one of those theta burners, though, Mike. I'll say that. I feel bad for anyone who was playing calls and puts on this one yesterday.
Yeah, I think this has to be one of the nastiest theta burners we've seen all earnings season. And part of the two reasons that this happened is, one, because it is a Friday, so that obviously played a big role into the weekly options decay, but also, two, the fact that Apple is literally at like 0% movement. So the call options on the weekly chain, like literally almost every single one of them is down. They're down anywhere from like 3% to 97%. The puts are down anywhere from 3% to 98% in a day. Jeez.
Man, that is rough. Here, I'm going to bring up a chart of some of these calls here, and wow, Mike, look at the 165 strike calls that expired today. Wow, they were at $300 yesterday, and they opened today and hit lows of 30 cents. I mean, wow, that is that's pretty bad there, Mike. That's pretty telling there, to go from $3 down to 30 cents on those options. That's a big drop, and that's the 165 strike calls. I know that Apple isn't in the money at 165, but still, I tried to pick something that I figured, maybe some retail traders would be grabbing and stuff like that. And man, that's telling, Mike. It's down so much. I can't believe it. And they're continuing to fall here as the market opened, which makes it even worse.
True. Yeah, exactly. Alrighty. Looking at some of these other plays, Tom, I'm seeing some action with Intel right now, and it doesn't look like some good action. So what's going on?
No, Mike. No, I don't want to see that. Oh, man. That's not good. Yeah. Intel's fallen down to $44 here. Yeah, I know they reported some lackluster earnings last night. I think their earnings were actually decent from what I read in the headlines. And then they ended up having some bad guidance for the next couple quarters. But yeah, looking at the stock here on the daily chart, Mike, I know Intel has been nearing a huge price point here. If we look at the chart of Intel, ever since the end of 2017, Intel's been bouncing on this like $42 to $43 support multiple times here. And when I say multiple, I mean a lot, guys. Like 1, 2, 3, 4, 5, 6, 7, 8, 9. If we bounce here, it'll be like the 10th bounce. Honestly, I'm not sure I'm expecting a bounce here, Mike. The selling pressure is pretty rough. And if we do end up breaking below this support, I'm a little bit worried that the selling pressure might start accelerating. So I don't know about you, Mike, but the setup here is definitely not looking the best, and these earnings definitely didn't help us. So I don't know. I'm a little bit worried about Intel in the shorter term, although I'm not too worried because they do pay that dividend, and I'm just going to continue to hold my shares for the longer term. I am in them pretty low, but still, I mean, to see him falling down this much is pretty brutal, Mike, especially after that earnings report.
True. Like, they've been consolidating literally for like 2 years. I mean, no, 4 years straight. Like,
Yeah, it
literally,
really
though.
has been. I mean, look at this chart. It's, like we talked about Walmart consolidating and stocks like that, and they've been consolidating for like a year and a half. But when you look at Intel, it's just been insane the way they've been consolidating. And they've been kind of consolidating at the high end, Mike. That's like right around that all-time high from even back in the early 2000s dot-com bubble, believe it or not.
Yeah. Alrighty. So, yeah, that's interesting there. Looking at some of the other movers we have today, it looks like Nvax is on the rise. Nvax, it's up around 11.5%. I'm not sure what is moving this one today. Let's see. It says FDA Advisory Committee to review Novavax's COVID-19 vaccine candidate in June. So that seems like good news.
Yeah, it definitely does. I'm sitting here in my head thinking though, Mike, like, man, like how many more vaccines are going to come out? It's like,
Yeah.
man, like I'm sure it's going to help the stock in the short term, but man, like I don't know, maybe some other variant or something will end up coming out that we needed again, but I don't know. Like I haven't we been seeing like a lot of these vaccine stocks like Moderna and Pfizer start to fall off lately?
Yeah, that's true. And also Novavax's like max weekly chart and just long-term chart is literally all over the place. Like it's so inconsistent. And another thing is, I forgot the exact country, but it might have been like Norway or I don't know, some country over there said that they are stopping vaccine production or something like that. So that's relatively negative for any vaccine stock.
Yeah, it really is. And man, look at Novavax's daily chart. This one's rough. Like you mentioned, Mike, the intraday chart looks pretty great. It's coming back to the upside. It has a ton of momentum. We're almost back up to $50 again. And then you go look at that max daily chart and you're like, oh man, that intraday move now doesn't seem quite so good. It's up 12%, but look at this, Mike. We're only moving up through like 2 or 3 candles here. It's not like we're really seeing that much movement overall.
True that. Alrighty. Then we have Jerry saying, you guys surprised Tesla's going up after the Musk announcement? Not really, to be honest. The fact that Musk said he doesn't plan to sell anymore, it's kind of like the damage is already done. It turns out that from the video I made yesterday, as of last night, we were able to tell publicly that Musk sold around like $4 billion worth of his shares. Today it was released that he actually sold around another $4 billion, but that was yesterday. But remember, we don't know until a couple days later because of how the filing system works. But overall, he says he's done selling for the time being, which is relatively bullish news. If he never said that, then people might have assumed that he might be selling even more. So at this point, it's not that bearish of news for the short term because he doesn't plan to sell anymore.
Yeah, I agree with that, Mike. That's very interesting that he decided to say that he's not selling anymore, and I think that's a good thing. Like you said, it really helps sentiments in the market, and if he wouldn't have said that, I would have felt pretty bad at open today. I don't know where Tesla would have ended up, but I'm glad that he did say that. And Mike, I just want to say, to all the haters out there, man, we have been saying over the past few days that part of the reason why Tesla was going down might have been because Elon was selling some shares. And I remember, Mike, so many people were saying like, oh, he don't need to sell his shares and he's not going to do that to his stock and all those different things. But man, it turns out that is what was actually happening, believe it or not. And, I know that we were kind of throwing on our tinfoil hats thinking that's what was happening. But, when you see Tesla's stock fall from 1,000 down to 860 by the time the market closes, I mean, there was definitely some type of big catalyst. And, we know that Elon had to get some money somehow. So I know it was definitely a pretty good guess there, Mike. I know you were one of the first ones to say it. So, kudos to you. You definitely hit that one on the head.
Yeah, people were roasting me, Tom. In the first Tesla video I made, they were They were being mean. They said
Yeah, they were being mean.
Yeah, they said Tesla. They said that he wasn't selling shares and all this stuff, and then we end up finding out he sold around $8 billion worth of shares. So that's nice. But Tom, I just sent you a link on Discord with the updated Elon trade. So let's pull that up really quickly because I want to showcase it. So yeah, Jerry, we're gonna go through the total amount Elon sold in a second. Let's see. So give me 1 second. We're just going to load this article up. Perfect. So we can see new filings put Elon Musk's Tesla stock sales above $8 billion this week. He sold around $8.4 billion worth of Tesla shares. I appear that all this, I believe all the selling was done on April 26th, April 27th, and April 28th. Yeah, he said another $4.4 billion was sold on Thursday, so that was yesterday. Elon sold $4.4 billion worth of his stock yesterday.
Yeah, that's huge, Mike. And you can see that their stock even had like a crazy move down, especially at market open. Like, I wonder when he exactly sold. Probably right at the get-go, would you think? Because that selling pressure hit pretty hard, especially on Tuesday and Thursday, of course.
Yep. Alrighty, so looking at some other things. Yeah, I'm just reading through the rest of this article, but it's all information that we already talked about or that we already know. What else?
Look, I love that he says no further Tesla sales planned after today. I didn't realize that he worded it like that on Twitter. That's pretty funny.
Yeah, it's true. Yeah, and then George said, well, the thumbnail read Tesla dead, which I definitely see triggering a lot of people. Yeah, that's fair. I kind of figured that was going to happen for sure. But the first Tesla video was, what was it? I think it's like Tesla's done or something like that. That was like the main video. That was like the first video. But yeah, I definitely know what you mean, George. And people get very sensitive when you talk about Tesla. Like, Tom, we can talk about any stock out there, whether it's Apple, Microsoft, Zoom, AMC, Tesla, anything. But when we talk about Tesla specifically, like, I feel like people have more of an emotional attachment to that than anything else. Like, if I ever say Tesla, if I just say something remotely neutral or negative about Tesla, I'm bound to get roasted in the comments.
Yeah, you really are. I mean, we've been seeing it the past couple months. It's been insane, some of the comments. And Mike, I mean, some of them are even pretty nasty comments, like I've seen some pretty crazy stuff been said in there, but it's definitely funny. Every stock goes up, every stock goes down. The sooner people realize that, the better off that they are going to be. But yeah, I mean, you're definitely getting roasted, but Mike, at the same time though, it's worth getting roasted over because, I'm sure that you did help out a few people here,
Yeah.
Like imagine over the past few days, I'm sure a lot of people were thinking like, hey, Tesla's dipping. Is it time to buy the dip? And, it wasn't. If you were playing like call options or something, it definitely wasn't because the way that those puts would have reacted yesterday would have been insane with the way Tesla fell down. So, man, it's just it's definitely telling. But I do think, though, Mike, that you're definitely helping people, and being honest is always the better way to go. And hopefully people appreciate it. Even if they love Tesla, hopefully they can at least see through all the clouds.
Yeah, and the biggest thing is just to be objective with any investment. So for example, you guys know I love DraftKings, right? You guys know I'm also investing in Zoom, and I acknowledge that yes, it is possible for those stocks to fall. It is possible for bad things to happen with those stocks. It's possible for any investment. But my major concern with people who love Tesla stock is a lot of them they just don't see any scenario where Tesla can fall, and that's just my major concern. So we'll see what happens over time, though. Tesla's a great company. I love Elon, but it's just very hard to pay this valuation. And we actually have a pretty big video releasing tomorrow. So around 30, almost 40 minutes long, talking all about Tesla's valuation and seeing whether it's actually worth it or not. So that'll be fun. Yeah,
Tesla has a lot of big stuff planned for the future. They are a big company, and Like I'm sure that even if they end up falling off for 6 months to a year or something like that, I personally still think that they'll still have some growth in the future. Obviously, they might go down for a little while, but man, they're supposed to be coming out with driverless semi trucks that's going to kill the trucking industry. They're set to come out with robots that help clean your houses, as Elon has been kind of hinting at over the past few months. And they even had a statue of the robot at one of those factory openings, I believe. So that was very interesting to see there. But, they have so much stuff coming out in the future, and they still have their Tesla truck coming out too. So they have a lot of big things coming. I'm not sure how low the stock's going to go in the short term, but I don't know, Mike. I think for like the next 5 to 10 years, they'll definitely still do okay. It's just all that shorter term price action is going to get rough, especially as they start spending a lot of money researching and getting everything going. And I know that that's been pretty rough for them the past couple of years, Mike, as they've been building all these big factories and stuff. It's definitely been hurting the cash flow a little bit.
Yep. Alrighty, so what else do we have going on? Looks like Chris said, good morning. How do you see DraftKings doing in earnings? I would love to think it shoots up finally, but anything can happen with earnings. I really hope it pops up. Over the past day, they've been doing good, but obviously when you zoom out, it's been very bad. Like I said, earnings are always 50-50. It's really hard to guess with earnings because just no one knows. What makes earnings a little bit tricky is the fact that sometimes a company can report great earnings and fall, and sometimes a company can report terrible earnings and rise. So obviously I'm hoping for the best. Tom, do you have the dashboard pulled up? Because I want to showcase something really quickly.
Yeah, I think it's on here somewhere in my 500 tabs up here.
Let's see. All right, perfect. So what I want to show is, so if we go to DraftKings and we look at the revenue on a quarterly basis, we can see that DraftKings revenue, like many other stocks out there, their revenue is cyclical. So in certain quarters, they do better than other quarters. From the data that we have available, DraftKings tends to do the best in the fourth quarter. This is primarily due to the major sporting events that happened around this time. What I've also noticed is that the first quarter tends to do well, but not as good as the fourth quarter, as we can see from the 2021 data. This is limited data, but I would imagine that the trend continues. So basically, the significance of this is that I don't expect their quarterly revenue to be greater than $473 million. If it is greater than that, that would be absolutely amazing. But realistically, it should definitely be significantly higher than $312 million, but I'm not expecting it to be greater than $473 million, if that means anything, which honestly it doesn't, because a lot of times with the earnings releases, it really depends on the guidance the company gives.
Yeah, the guidance seems to make more of a difference nowadays than a lot of the big actual numbers. Like I know Intel had great numbers last night, but their guidance were pretty bad, or was pretty bad, so it kind of made the stock fall off. And like you said there, that guidance is really important, and it shows what's going to happen in the future. And Mike, I feel like with everything going on with the FOMC over the next couple months, that's just going to make the guidance even more important. So I think it's really important as well. And as long as DraftKings, like you said, beats that year-over-year number of like 312 million on this next report, I think it'll definitely do okay. So I'm really waiting to see how this one goes, Mike, and hopefully it goes better. One good thing about DraftKings on this quarter is that they're going to have that revenue from New York, which I think is going to be pretty big. So hopefully they report some good numbers there, and it helps DraftKings continue to rise up. And Mike, I really want to see that net income start to get better for DraftKings, because man, look at this, the net income for 2021 was bigger than the revenue, believe it or not, to the downside, and that's pretty telling as they spend all their money on ads and stuff like that. But I just hope to see some better fundamentals here over the next couple of years out of them. And I will say, I'm also in DraftKings for the long term, and it's my heaviest weighted stock in my portfolio, so if that says anything.
Yep, exactly. So obviously we want to see those fundamentals getting better and better over time, and I expect that they will, but only time will tell, and right now the stock's up 5%, which it's good, but then again, it's like when you zoom out, it's like, it's like it's nice to see it up 5%, but, when everything else is tanking down, it's hard. But, yeah, I definitely look forward to the earnings report, though. It should be interesting. What else do we have? Sean said AMC at 16. Let's take a look. AMC is not doing too bad today. It's up around 2%. It looks like it's holding that support, Tom, right around 16, just like Sean said.
Yeah, it really is. That's been a big support the past few months. And man, if it holds here and starts bouncing, it could definitely make for some good plays. Sean, I know I heard you were into some AMC options the other day. I wonder how those are doing for you. Definitely seems like it's up today, so that's good at least. But man, Mike, I was pretty surprised to see Sean was playing AMC. I was like, man, I wasn't expecting Sean to play that.
Yeah, Sean comes with some of the volatile plays sometimes, like Donkey Horse, Tom. You know that.
Yeah, that's right. I forgot about good old Donkey Horse. Actually, Donkey Horse has done pretty good the past couple days, believe it or not. I remember when Sean was talking about trading Donkey Horse a lot, it was back there around $5 or $6, which, man, it really started falling off.
Yeah, I was in it with him, and the second that it had news related to like an SEC investigation or something like that, I was like, all right, I'm done, because the stock was looking brutal, and then then you have that news about the SEC going after them or whatever it was. I was just like, it's time to stay away from this one.
Yeah, it definitely is. I mean, it's been brutal, just like every other EV company besides Tesla, of course. Tesla's the only one that has actually held up with some type of, good movement here. Like, for example, Tesla's down, of course, but, it's definitely closer to its highs than Rivian or Lucid is, that's for sure. Man, whenever we look at some of these EV stocks, they're just getting so low. It's kind of scary. I will say, though, Rivian's not looking too bad on this $30 support. It's definitely not the best, but, not the worst either with these growth plays going up.
True that. Alrighty, so we have Jerry saying, dude, you guys are awesome. I like Tesla too, but I try not to get too delusioned also. Thanks for the insight and the info. Forget the haters. There we go. He said, how about Amazon entry point? So let's take a look. So I've been watching Amazon. I've been really, really watching the 2250 level. Realistically, I don't know if we're ever going to touch that again. It is kind of far off. So it's like I would like Amazon at 2250, but realistically, I don't know if we're ever going to get that opportunity again. Maybe we will, maybe we won't. One important thing to keep in mind is we have that split coming up with Amazon, Tom. It's a 20-for-1 split. I believe it's on June 5th, June 4th, something like that.
Yeah, let's see. It looks like it says on here June 6th, actually.
Perfect. So, yeah, the split's coming up in about a month or so that'll be good. And with the split coming up, it will also present quite a bit of opportunity for some short puts on Amazon. Like, if you wanted to short a put on Amazon, it costs quite a bit of margin, but let's see what Amazon's price. So Amazon right now is at like $25.30. Let's say 20-for-1 split. Yeah, Amazon shares are going to go all the way down to around $126 to $127. So that will definitely give us opportunity for some short puts or even covered calls too. So what's cool, and the only reason I bring this up is, like right now, if you wanted to short a put on Amazon, I believe the margin requirement is around like $250,000. After the split, it'll be around $12,000. So that's awesome because you could basically just get paid to potentially scoop up Amazon shares at a lower price. So we'll see what happens, though. I know Amazon is a powerhouse company. They've been consolidating for like 2 years straight, and if there's any major dip, it should be a pretty good opportunity.
Yeah, I would think so too. And it's falling off in a big way. I wonder how it looks on the dashboard, Mike. Let's go check it out on there. AMZN. Yeah, I mean, the price of sales actually isn't as bad as I thought it was going to be honest. I guess that's because it's been kind of falling off. But I will say what I don't like with Amazon, Mike, is that their net profit margin is so low. But, they're a powerhouse. They're still making a lot of money. And you can see their revenue and net income and stuff is still doing pretty well year over year. So that's good to see. It looks like even quarterly their revenue is doing pretty good. So that's great. Mike, it looks like Amazon also kind of has that movement like DraftKings does with their quarterly revenue. You can see like Amazon does a lot better in Q4 with Christmas going on, kind of like how DraftKings does better in Q4.
Yeah, exactly. And then another thing is that Amazon's gross margins have been increasing over time, which is pretty good. In 2012, they had a gross margin of around 14%, and in 2021, they had that all the way up to 26%. So that's nice. In the bottom left, we can see the red bars, how they moved over time. That represents their gross margins. Also, their net margins have been increasing as well too. So while the net margins are still relatively low, it is good to see that they are increasing and appear to be becoming more efficient as a company. The revenue's booming. What else? I mean, yeah, the revenue's booming. What I don't like, Tom, is how their shares outstanding have been increasing. Let's compare their shares. Oh wait, so. Here, I'll just, let me give an example with Apple really quickly. So if we go to Apple and we look at Apple, Tom, can you add a chart all the way at the bottom that shows weighted shares outstanding and weighted shares outstanding diluted?
Do you want it annually or quarterly?
We'll do annual.
Annually, okay, sounds good. So yeah, go ahead and add what in?
Weighted shares outstanding and then weighted shares outstanding diluted. Perfect. So, guys, check this out. This is actually really important. So, you see how this has been falling over time? This shows that Apple has been buying back their shares, which is a really, really good thing for Apple shareholders because you own more and more of the company. It improves financial metrics and ratios and all that stuff. But it also, like I said, it improves your ownership of the company. At the same time, when companies increase their weighted shares outstanding, it's bad because you get diluted. So check this out. While Apple's chart is sloping down, which is what we want, let's go to Amazon and check it out like that. Amazon, we can see it's been stagnant for the most part and actually increasing a little bit, which it's not the end of the world. It's just that it's better if they were buying back shares, which they might, considering that their free cash flow is like $100 billion. So, we'll see what happens. But that was Apple's free cash flow. Sorry, Amazon's free cash flow is only around 22 billion.
All right, did Amazon announce some share buybacks? Didn't they announce something like that on their last report? Or
yeah, I thought so. Let's see, share buyback.
It was like 70 billion, or
yeah,
I thought Apple did 90 billion. And
yeah, exactly. So I'm looking at the articles right now. Yeah, didn't they just announce it yesterday? I thought we covered it yesterday.
I thought so.
Yeah, I'm pretty sure. Let's see.
I'm trying to find it on some reports, but I'm not seeing it, believe it or not. But yeah. I swear I thought they did.
Tom, we've been through so many earnings reports lately. It's like it's hard to remember which one's what because over the past week especially we've had Microsoft, Amazon, Apple, Facebook. What was the other one?
Netflix.
I thought that was the other week. Like who reported on Tuesday? It was Microsoft and who?
Yeah, let's go check it out. Microsoft. Oh, Google.
Oh, okay, yeah, it was that. So,
I always forget about them because they have so many different things like YouTube and everything. It's kind of funny.
Exactly. So, yeah, I mean, either way, share buybacks are a good thing for the most part. I know Apple had announced a giant share buyback program yesterday, but then again, Apple is almost a $3 trillion company, so even a $90 billion share buyback program, while it's a ton, it's not insane considering how big of a company Apple is, but it's still a good sign regardless.
Yeah, it is. I mean, that's a really good sign with Apple, and it's not a good sign with Amazon though. So hopefully Amazon starts changing the way that they do some things. I know that the way Bezos stepped down, Mike, it was kind of funny. Bezos announces he's stepping down, and then just a couple months later, they announced that big split. So it's kind of funny, but maybe he was kind of keeping the company, kind of hindered there. I hate to say that, but, maybe it's him. Maybe it was the board. I don't know what exactly has been going on, but I hope they end up changing a little bit, Mike. And I think that split will really help Amazon. I really think, Mike, that Amazon being so high has a bad psychological effect on traders. And I feel like that's been hindering them over the past couple of years compared to all these other companies, like even Tesla's split. So for Amazon to not do it's kind of crazy, but I'm glad they announced it.
Yeah. Alrighty. What else? So yeah, I'm just looking at a couple different plays. It looks like George mentioned Twitter, which is also popping up on my scanner.
Wow, I like this setup, Mike. It looks pretty good intraday, and I really hope Twitter starts moving back towards $54. You know, you would think that it would get pretty close to there as this deal, as like more details about the deal come out. But yeah, I mean, I'm liking the movement, Mike, and I don't know about you, but I've been on Twitter actually this whole week, believe it or not. I'm someone who almost never ever used Twitter, and I've been getting on it the past week or so just because of Elon, because you know he's just been so instrumental in the markets over the past few years. So I figured I might as well check out what's been going on, and you know I'm kind of glad. You know I've been seeing a lot of cool things on Twitter, believe it or not, and you know Mike, I will say it's even very helpful for stocks. You know, like I see a lot of good information on Twitter before it even comes out on like Thinkorswim and other places.
Yeah, that's true. That is true.
Although I will say sometimes you have to take it with a grain of salt, because sometimes you'll have you know Joe Schmo spewing some random article that's not even real out there. So
Yeah.
you always got to be careful. But as long as it's like one of those reputable Twitter sources, then it's usually pretty good.
Yeah, and we also have that popular news tab in the Discord. It's back up and running. I don't know what happened with it earlier in the week, but it stopped working. But it's back to functioning correctly. So those are like direct tweets too. So it's very, very quick, and it's like a nice summary.
Yeah, I really like these, Mike. And we can see like even today, like Walter Bloomberg is coming out talking about the price of crude oil there, extending the session highs of 107.4 a barrel. You know, they talk about all this crazy stuff like University of Michigan, their 12-month inflation forecast. You know, there's all type of Russia news coming out and everything, Mike. They talk about different economic data points. Even last night or this morning, they were talking about Musk selling his shares and everything like that. So it's definitely cool, Mike. And, guys, check out the Discord if you're not in it. I know a lot of viewers are already in the Discord, but, man, it's definitely sick. We've been adding a lot of bots and stuff, too. And, man, even like the day trading channel has been pretty hot lately as well. Lots of people have been posting good profits lately. Like Simp yesterday killed it, Mike. I remember he was doing so well with his day trades. It was pretty amazing.
There we go. Awesome stuff. And then we have Iranical saying, I think Apple tries to break out. Let's see. Yeah, it's moving up, Tom. It's now up around 0.8%. The biggest thing is just watch out for those options. IV is still decent right now. I wouldn't call it... Yeah, I definitely would not call it low IV. It's like mid-range. So options are still decently priced.
Yeah, it's like right in the middle of that range. Maybe if the IV was back down around like 30% or a little bit lower, we could maybe say it's low. But yeah, right now it's just like right in the middle there. I don't like that Apple's kind of bouncing off this 166 resistance. I don't like the way it's moving off of that. I hope it definitely breaks back above there as we continue through the trading day today. But overall, Apple's had a pretty great morning, Mike. I'll take this movement over that bad movement we saw in after hours. Hopefully we keep extending back up towards that high of last night around 170. That would definitely make for some good price action today if we could get up there. I wonder how much more of a percentage to the upside that is from Apple. So if we break above 166, up to 170 would be like another 2 to 2.3% uptrend. So pretty good there. That would definitely make for some nice movement, even on some options there if it did end up rising. But like Mike said, it's been very volatile today, and I'd be careful with it. That 166 resistance looks pretty big there. Mike, today it seems like a lot of these growth stocks are looking a lot better than some of these plays like Apple. Like, for example, like Roku is just about testing that high of after hours from yesterday. And who knows, like some of these growth plays are looking hot.
Yep. Awesome. Let's take a look at some of these growth plays. Actually, hold on. I was going to look at DraftKings, but we always talk about that. Zoom, too. I mean, they are looking pretty good. Some of them are pulling back a little bit right now, but for the most part, they do look pretty good.
Yeah, like Zoom looks great. DraftKings looks okay. Plug Power looks good. RUN looks pretty decent today, too. Definitely holding up a lot better than a lot of stocks are. I wonder how some of these social media companies like Snapchat and Pinterest are doing. And wow, Snapchat, Mike's actually having a pretty good breakout above $29. that was pretty cool to see with them this morning. I know Pinterest was doing pretty good with earnings last night, or not last night, but over the past couple days, and they're kind of approaching those highs again. So yeah, a lot of these growth plays are moving, Mike. Even those solar plays like Enphase is looking pretty good. FSLR definitely looking pretty hot today too. Even Asana, Mike, up another 3%. So definitely seeing that type of good intraday movement that we've been waiting for. And even some of these chip plays like AMD aren't looking too bad.
Alrighty, there we go. How's the overall market doing?
Not the best. Still kind of flat, kind of like what we talked about at market open. The SPY was just sitting right around that closing price of yesterday to just slightly below it. And, we were getting close to that closing price just a few minutes ago, but now we're kind of dipping back. I will say it doesn't look too bad though, Mike. Especially with the way all those big earnings are moving and everything. I definitely hope the SPY keeps popping up here. There's a big resistance coming up right around like 426 to 427, even 428. So lots of big price areas to look at with the SPY. As far as support though, Mike, 422 seems like a huge support level here. I've been kind of waiting on the SPY today because if we break below 422, I think it might make for a pretty good play to the downside. But, with the price action so far this morning, I don't really expect us to fly below 422. Although I will say the SPY has been surprising me lately, Mike. Like the way that we turned around yesterday was just nuts after that sell-off at market open.
Yeah. Alrighty, Tom. Well, I think we covered all of the major things to know. Do you have any final thoughts before we close out?
Yeah, I just kind of want to talk about a little, I kind of want to bring up the FOMC next week just a little bit because, we're going to have a big event coming up next week on Tuesday and Wednesday. Of course, Powell's going to be speaking at like 2:30 p.m. Eastern time on Wednesday. So that's going to be a big event when that happens. But man, I just wanted to talk about it because we've been seeing, some crazy market price action over the past week with all these earnings and stuff. And then next week, Mike, as we know, we still have big earnings coming out. Like we're going to have AMD, Pfizer, Marathon. We're going to have Uber, CVS, Twilio, Shopify, Square, Cloudflare, Fubo, Open Door, DoorDash, DraftKings, Meridian. I know that one's not too big anymore, but there's definitely a lot of big stocks. MGM's reporting on Monday. Can't forget about them. They're pretty big, but yeah, lots of big stocks next week too. Not as big as this week, of course, but still definitely some big ones here. And it's just going to be very crucial because of that FOMC meeting, of course. And as we know, Mike, the Feds are expected to raise interest rates by quite a bit. People are expecting like 75 to 100 basis points. And look at this, Mike. They now have it up to a 99.1% chance. So it seems like it's just getting stronger and stronger here. And, if they raise it by a lot of people contemplate that the market might go down off that. Now, that doesn't always happen, so keep that in mind, guys. But, it's definitely some hawkish news here.
All righty. Well, thank you guys so much for joining today's stream. We really appreciate all of you. Before we close out, I just want to personally thank each and every one of you. So thank you, Neighbor Jay, George, Hunter, Raymond, Jerry, Square, let's see, Chris, Sean, the other Jerry, Iranical, and I think that's everyone. So, yeah, thank you guys so much for joining. Hopefully the market has a great day today, and thank you guys so much for watching.